Alrighty, traders. This is Blake Morrow. You are listening to the second part of the FACE webinar. Hope everybody's doing well. We're going to get the bias chart going. And, the dollar is actually a little weaker right now. One of the things I want to point out actually as we go into the bias chart is look how strong gold and silver is. So we're seeing a big recovery here, and let's talk about that. So, and I'm going to remove these things, and we can put the gold on the bias chart here right now. So we're going to be approaching some resistance probably at this 1845 level. I bet you that's really close to a 38% retracement. It's not. I thought it felt like it would be, but here we go. All right, so we're seeing a nice recovery in gold. It's really kind of hard to judge what I don't have a good feeling about gold. I know gold is probably rallying because the dollar is pulling back right now. That would be my 2 cents. But I'm going to write down gold resistance being back at, I'm going to write down the 38% retracement, 1851, and then after that, obviously 1875, because that has been really key resistance in gold. So. And, since we're here, 1875, what I was thinking about doing is removing, we may add like another column here to put up Bitcoin because, hold on really quick. Just give me 1 second, guys. I'm sorry. We might be adding Bitcoin because obviously Bitcoin's moving, and the news from Elon Musk about Tesla buying all this Bitcoin. It's such a pump and dump scheme, but hey, crypto's moving, and that's the fact of the matter is that's what we're seeing. So we just spiked up to 127% extension, or really close to, at this 45,500 level. So I'd expect support now on dips back down towards 4,100 for those of you that are keeping track. Anyway, I'm probably going to be adding Bitcoin to the bias chart soon. So let's go back over to where we were just talking about gold, and let's get support in gold. There it is. Okay. So support for gold intraday. Well, I would write down 1780, but I think it's going to be more at 1800 because I think dips back down to 1800 are going to be bought. So let's go ahead and put that down. It's not great support, so I'll do 1780 first and then 1800. I do think we're in a range. All right, let's flip over to currencies. So if you're looking at the euro, as I explained during the FACE webinar, this is really what I'm paying attention to. The 120, we'll write 120.65. And I'm not going to put us in bearish because the move Friday, we were, bearish, but then we got a false breakdown. So I don't want to put it bearish at the moment. If we close back below 120, that's where I'll, have to, consider going back to bearish. But I believe 120 is going to be pretty good support on dips today. I don't think we're going to get all the way back down towards 119.15 or 50. I do think that this, even if you look at it like this, let me grab my pen. Even if you excuse me, if you look at it like this inverted head and shoulder pattern, 120 is probably going to offer us pretty good support down here, I think. So I wouldn't get too excited about downside in the euro yet. Now, obviously, one of the things that I would be paying attention to is if for some reason stock started to reverse, then that's the only thing, in my opinion, that's going to strengthen the dollar at this point. Let's go over to the cable. Okay, so we came out of this ascending wedge. Then obviously last week, you know, following the Bank of England, we popped back up. We've been just kind of challenging these highs. It's really tough to be long the cable while we're below this 137.60 55, because that, if you guys don't remember, that's the long-term 78% retracement, right? So if you look here from the 2018 high to the low, that's the 78% retracement. So that continues to be really key resistance. 137.55. I'm going to put an asterisk there because I do think it's key. It's keeping us from turning bullish while we're holding it. Am I bearish? You know, following the Bank of England, how they, you know, kind of got rid of the talk of the zero rates or negative rates, excuse me. It's hard to be like super bearish either. So I think while we're in this channel, we got to respect it. That means support obviously is going to be key here, but I would say that any dip now down to 136, we might get a quick move. I mean, the cable's trading a little heavier today. You know, maybe we get a move down to 136. I kind of doubt it today, but I mean, I'll write it down. I'm not excited about the sterling at the moment, so really don't have much of an opinion there. The Aussie, I'm thinking that the Aussie is going to rally towards 77.25, which is the 618 retracement. It's also channel resistance. So let's put that up. 77.25. I think that's going to be key resistance. We're going to keep us in range because I think we're just kind of, you know, bebopping around here. Nothing super exciting. But shorts. Support should be pretty solid on any move back down towards 76. You can see right through here basically is a lot of support, right? So that I would say 76 intraday is going to be good support. 75.50 would be really key, but again, I don't see us really getting down there. So there's your 76 cent is going to be support. Let's talk about the Kiwi. I mean, look, we might break this 72.15. You know, I'm going to write down that 72.15 level. We're getting close, but every time we get up here, it seems like we reject. So just, you know, be a little careful. Support being 71.35, then 71 cents. I don't think we're going to see that. 71.35. You know, the moves lower in the dollar really probably made a lot of, myself included, people that are bullish the dollar a little bit more nervous. I mean, you know, because the dollar really, you know, came under pressure on Friday. So, and it flipped everything back to almost, except for like the dollar index, and some of these currencies will, you know, actually, I don't even know if I want to put the dollar Canadian in for bullish right now, even though we've come out of that descending trend line. I still think it's, you know, kind of range bound for right now. So the only thing that's actually bullish is the dollar index, surprisingly, I think. 128.30 is going to be resistance. 127.50 is support here. 128.50. Oh, no. I'm sorry. It's not 128.50, 128.30. I just said it too. Dollar Swiss. You know what? The dollar Swiss remains bullish. Believe it or not, we've got this inverted head and shoulder pattern. It looks like dips right back down to basically 89.80. Remember, 89.80 was a big deal on the way down. You know, and it's going to be it was a big deal overnight. So 89.80 resistance, you know, 90.50. We're going to keep that in bullish because we still have the inverted head and shoulder pattern that's playing out. And you know what? The dollar yen, believe it or not, I think it's still kind of bullish looking. Maybe that's more yield related. Same with the dollar Swiss. US dollar Norwegian krona, 850 resistance is going to be right back up here. Whoops, I didn't mean to grab that. It's going to be right here at 850, basically 858. And this is going to be 850. We got to just keep it in range right now, especially with crude oil as strong as it is. Dollar Mexican peso. I think we're building a wedge here. So support is at 207. Resistance is going to be any move back up towards 2040 should be faded for now. I will point out though, I still think that the dollar Mexican peso, dollar Canadian, even the dollar Norwegian krona, and I know Stelios and Steve talked about it earlier on the Face webinar, they are diverging away from crude and away from stocks. So that doesn't mean that they won't go down, from here. That doesn't mean that the dollar Mexican peso, if stocks continue to go up, the dollar Mexican peso for sure, if stocks continue to go up, we can go back down here. But if stocks get any type of hiccup whatsoever, we're gonna break higher. And that, I just have to point that out, especially with the peso, Norway, Canadian, they still act well dollar-wise, considering, right? Considering. All right, let's go to the dollar yen. Even the dollar yen's acting fairly well. I mean, I'm not super excited about the dollar yen because I just don't know how to trade it, but let's mark this up because I think this is obviously significant right now. So resistance is going to be at 105, basically 105.70. Let's see where dips might take us. So if we take this low here, the 38% retracement comes in, not for a while. It comes in all the way, basically back down towards a 50% retracement. But I don't think we're heading down here, not today anyway. But we can also take the fib from this low to this high. You can see it right there. The 38% retracement is going to be, basically right around here. So I'm going to say 105, 105.70. And we have to stay bullish while we're above that broken trend line. 105. And this is 105. Whoops. 105.75. This pink multi-month trend line, you got to stay bullish while you're above it. You've got to. All right. I know we're finding good resistance here at 105.75, but I think it has to remain bullish. Dollar index. Again, you guys remember my analysis from not only the weekend, but probably on the Face webinar. 90.70 is support. Okay. We're pushing through this trend line right now. We might get down towards I'm going to write down a couple levels here on the dollar index. 90, 70, and then 90, 85, right? Resistance for today, it's going to be right here. Intraday will be 91.30. 91.30, and then obviously 91.60, and then and I'm going to keep it on bullish, guys. We still have the inverted head and shoulder pattern. We can't write that off right now. We can't. Okay. All right, let's talk about Didier. He asked about silver, which I will go into silver here in a second. And I'm just going to wrap up with the S&P. The S&P is so strong. I mean, resistance is futile. I mean, it's so strong. I mean, we have to break back below 38.65 basically to turn to take us out of bearish 38.65. But while we're above that, you got to keep looking higher. I mean, damn stock market, 30, 39, 27 is 127% extension. So 39, 27. It's ridiculous. It's just so strong. It's 127% extension. So there's your bias chart. It's finished. But let me just take a real quick look, Stelios, because I know he's trying to take a picture.
I got it.
Oh, you got it. Okay, good.
Yeah.
So here's silver. Whoops. Here's silver. So we held the 78% retracement. I still think we're in a wedge, right? So we're coming up into the resistance zone. Let's see where this is at. High to low. The 50% retracement comes in around 27.95. That also matches this previous high here. So 27.95, basically 28. I think that's going to be pretty good resistance today. So if we continue to squeeze high, just I think 28 is going to cap the rally. All right. Well, Stelio, Steve, how you guys doing this morning?
I'm
Good,
very
mate.
well, and it's
How have you
seriously,
been?
Blake, it's DDA. It's not die. We don't want him to die, right?
DDA. Got it. All right. Well, I'm going to let you guys take over. I'm going to get to the markets, and yeah, good luck everybody today. Man, look at the euro just popped up. I mean, stocks are strong, dollars moving. What the heck? Yeah, all right, guys. Good luck. I'll let you take over.
Thank you, Blake. Thank you very much. Great.
Thanks, guys, and thank you all.
Great bias chart as always. So it's Groundhog Day again, like the movie. Stock's going a little bit higher. The dollar is kind of undecided. I mean, it tried to break 120. Remember, we've been talking about 120 for a while, and it broke a little bit. But then we had payrolls, and then it came right back up, and now we're back into the same area. And for people need to remember, I know it's not official, but above 120, the ECB starts talking about the exchange rate. Actually, they start talking about how they're not looking at the exchange rate, but they are mentioning it. So, they're looking at it. But really, what's, I think, dominating price actions today, again, is cryptos. What do you think, Steve? It's, I know we talked about it. It's Elon Musk talking about
Yeah,
Tesla.
absolutely. A new tape bomb, in essence, right?
Yep.
It's all that's needed.
Yeah. I mean, if cryptos are going to be going, flying higher, we should be seeing some kind of same-ish, obviously not the same magnitude, but direction in things. And we're seeing that. And obviously, they're not going to be going up 10% in a day or down 10% in a day, but they should be following as long as risk is also not dropping. And that's what we're seeing. I think silver is, Blake mentioned it just now. I think silver is on the cusp of breaking out. We had that one daily candle, which was huge, and then reversal the next day. I'm personally going to ignore both of those candles as if they didn't happen, because they were driven, remember, by the Reddit guys and everything. So I'm ignoring that. And if you ignore that, then we are past the zone. I had the zone between 26 and 2670 or something like that, and that's gone now. So theoretically we should be going higher. I am still long, and I'm going to be adding, I must admit.
From a technical perspective, I'm still a little bit skeptical, meaning it's not 100% clear to me, especially besides silver, looking at gold, if we have found a low, or at least gold needs to make one more low. You know what I mean?
Yeah, I can see that. Yeah.
But I think they've diverged significantly enough to say that there is a very, very good chance that even if silver makes a new low, even if gold makes a new low, probably silver isn't.
Yeah, and remember, silver outperforms gold on a rally, so maybe it's leading the way. I don't know.
Yeah, absolutely.
We could have another low for both, but we'll see. You were getting the usual question.
Yeah, I'm not though doubting where the long-term trend is, and I think it's imprudent for anybody to do so, if you're asking me. So that's that.
Okay. I think, well, we I mentioned all the things I wanted to say on the first half of phase, so we can have a look at few questions. We have platinum and palladium and crude, I think.
Absolutely. Okay. So gold. Nothing much to say here. We haven't formed a lower low. We came close to testing the previous low. So as I said, for me, it opens up the possibility of perhaps one more low. Silver still following this channel, this upward looking channel. We're clearly above the broken long-term channel or triangle, because you could look at this formation as a triangle if you take into account this intermittent trend line, or a channel. Both are valid interpretations. Platinum, we've said that it's looking good, it's looking healthy, it was overperforming, and platinum seems to be breaking above its recent, what was more or less obviously consolidative formation, and currently testing a very key resistance area. You need to go back to the chart to see why it is key, but it is. Confluence of resistances, actually. At 1171, I had said a long time ago that it was the next upside target. We've now reached that. I think we're probably going to be extended higher towards the 161.8% extension at 1336, and we take it from there. Palladium still in a long-term consolidation. I think it might take a long more time. Copper, probably not a head and shoulders formation. The more the price action started unfolding, the more it looks like a triangle, the more it looks like a bullish consolidation that seems to be breaking out. RSI is also testing a trend line resistance at the moment. If that also breaks out, I think it's more or less a valid indication that we should have at least one more leg higher before we can talk about a deeper correction, because none of these assets has really corrected lower. I mean, all the corrections we've seen in the vast majority of risk assets and risk correlated assets since they bottomed out around the 20th of March are like, corrections in time, but not really in price. And I think we eventually need to also correct in price. Another example of such a behavior is nickel, right? RSI diverging, etc. But what nickel has been doing is, in essence, forming a similar pattern as platinum, as palladium, as platinum, had here. So platinum perhaps leading nickel because the formation is rather similar. Refusing to break down will eventually mean that it's just going to continue higher. I've already in phase part one, I've already given my skepticism about crude oil, in the sense that it has reached the next upside target. It's overdone. I think it's a risky proposal to look into buying now after this move from 11, because the continuous bottom there at 11. So after having moved in the continuous from 11 to 57.5, without really correcting in price, I think you should be somewhat careful. Natural gas, finding some resistance the last couple of days, but I think the interpretation that we've broken out is still absolutely technically valid. So nothing really to add there. We might, I don't know, we might backtest this channel's trend line resistance as support, perhaps. Not unlikely. Some of the exotics I wanted to show the other day, we had talked about the Turkish lira. I expected a corrective rebound and lower. That happened. Then we formed a pennant, then lower. So, we finally have like a healthy move down in the Turkish lira, which, it's not a coincidence, because they finally decided to do what actually needs to be done. And, Erdogan, you realize that he has to surrender in letting the central bank be actually a central bank and not a, in essence, a branch of the government that will just, do the politically liked thing by Erdogan. Of course, before he did that, they had to burn through a lot of their foreign exchange reserves, which, in my opinion, could and should have been avoided, because at the end of the day, you can't win in this.
He was just postponing it. I mean, why
Yeah,
waste it? You're
he was
right.
postponing the inevitable, and at the same time, as it always happens, postponing makes the cost even greater at the end. That's the only thing you achieve.
Of
You push
course.
the problem in the future, but at the same time, you are inflating the problem and making it bigger. That's what always happens. So, stupid type of way to treat a problem, but it is what it is. That's what happened. Now, I've already spoken about my skepticism about the DXY here, DXY backtesting as we speak, this neckline. So I think likely today, because you never know. I mean, volatility might just completely die down and the markets might not do anything else for the day. But even today might be a decisive day about what happens from here, both in risk assets and in the dollar, because those two are rather closely tied with each other. It's not by accident, of course, that the opposite type of scenario is playing out in the Euro USD, meaning so far this looks potentially like a bull flag. We're close in testing that. If we break higher, probably that's also another nail in the coffin of the possibility that the DXY was actually, producing something more than just a little consolidation. The Aussie USD also looks like forming a bull flag. The Kiwi is actually attempting to break through this equivalent bull flag, right? So risk assets, other than showing the obvious, S&P, at a higher high, the Nasdaq at a higher high, blah 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 blah. Just look at the VIX. VIX still slightly diverging, right? I mean, we don't have a lower low, despite having a higher high. But this is a pivotal area in the VIX. So, if we are to see like a move higher in the VIX, which means lower in equities, this is the place it should come from. I mean, it has already completely retraced this big spike higher. If it wants to keep diverging, it needs to rebound from here. So, in essence, I think this week will be rather pivotal in showing us if we are about to finally see some type of a reversal and some type of a corrective move, or that's going to be postponed for a little bit later, a few weeks later. Who knows? I mean, these markets don't make much sense, so you just need to go with the flow. Just go with what the technicals tell you, not what your brain tells you. Because, I mean, naturally, your brain tells you should be fading all that, but the point of being here and doing the right thing is making money and not being right. Because if you're right at the wrong time, you've still lost money, right? So in essence, you're still wrong as a trader. And bottom line is being right as a trader, not as an economist or as an analyst or whatever else, right? Let me go through some of your questions. Silver, crude, we talked about it. Euro yen, yes, absolutely. Let's have a look at this. So here it is. Listen, Euro yen seems to be in some kind of a consolidation. Looks like a megaphone formation. But in any case, I really can't turn bearish, given we had a clean move higher, a clearly corrective move lower. I think as long as we're trading above 125.25, yeah, admittedly 127.50 is the resistance, so we're near that. So I'm not saying you should be buying here, but I think that as long as we're trading above 125.25, you should keep a bullish bias here. That's what I think about Euro Yen. Next upside target is, by the way, the long-term 61.8% fee, but 128.70. So keep that in mind. Palladium we covered, platinum we covered, DEFX handle. What is this, mate? Alexander, sorry, Ingmar, what is the DEFX? Whoa. Decentralized finance index. Jesus Christ, what kind of a move is this? I mean, yeah, this is the epitome of a parabolic move, right? Just look at this. I mean, if you just cut the chart there, you have more or less a normal market. And up to this point, if we were here in history in price action, I would definitely tell you that, listen, probably this thing is going to produce at least another leg higher. Why? Because we had one leg higher. This looks like a triangle, and we should have at least one more leg higher. But this thing, it's one of these things that you can be sure about two things. First of all, you don't want to fade it, because you could make the same argument of fading it there as you can make here. I mean, look at this. It's gap up after gap up after gap up after gap up, and unfilled gaps, right? So runaway gaps, what we call runaway gaps. But on the other hand, I can also be sure, because these type of markets, that's what they do, that at some point this move is going to retrace a huge part of it, and very, very fast. Now, in such a type of parabolic moves, the problem is that there is absolutely no way, and if there's anybody that tells you that they know how to do it, they're just outright lying to you, to predict where the high is going to be. Now, of course, you have some tools to perhaps predict some type of a high. In essence, there are some formations in parabolic moves that are rather distinctive. Let me give you an example. Now, this is going to be completely an assumption, right? So let's say that after this 2 days, you open the next day there. And it's a big black candle. So you open with a gap lower, and there's a lot of selling pressure within the day as well, and you close near the highs. Then there is a good chance that this is an island formation, right? So in order for me to feel more comfortable of saying this looks like it has stopped and we should see like a big retracement, I would want to see something like this, like what I described at the moment. Until something like that happens, I raise my hands and, surrender to the mania of this market, whatever the hell it is. GMDA. Okay, just a favor. If you could also give me a little bit of context of the tickers you want me to be looking at, I would be more than grateful. GMDA. I can tell you one thing about GMDA. Technically speaking, I have no way of saying that this is not a bullish market, which seems to just be breaking higher, right? So yeah, that's all I have to say about this. This looks to be like a bullish breakout here in GMDA. Euro THB. Okay, let me open that in another window because that's clearly a currency. Okay. Not easy to tell you. I'll tell you why it's not easy to tell you. This was a very easy move to call. Very easy. I mean, this is a textbook triangle after a reversal higher, very nice rounded bottom here. You can see how beautiful of a rounded bottom with a false breakdown here. I mean, this was a beautiful formation, right? Then quite a nice acceleration to the upside, then a clearly corrective pattern, then an impulsive move higher. Then we got this, which at the time would have looked like a beautiful continuation formation once again. But it did the opposite. It produced a corrective move lower because it was an ABC. Now higher, now lower. So I'm a little bit perplexed with this move, meaning I'm not clear yet if the corrective move is over here or if it's more complex. So in the medium to long term, it looks to me extremely likely that this is going to move to the upside. but I'm very skeptical in telling you it is easy for me to look at this chart and tell you, yes, we've bottomed out, or no, we need one more low to bottom out. You know what I mean? So I would keep monitoring this market, and for the time being, I wouldn't been doing anything with it. I think it's eventually moving higher, but I feel uncomfortable in saying how soon that's going to be happening.
Awesome.
Pound CAD. Oh, by the way, and this is going to be the last one because we have today Trufa, right, Stelio?
Yes, in what, 10 minutes or something?
Yeah, okay.
Yeah.
So look at this, Pound CAD. Huge triangle. Just look at this. Just look at this formation, right? Huge triangle. So the long-term trend is completely non-existent. So keep that in mind, because I always like to see things top down, right? So long-term trend, completely non-existent. Shorter term trend, you can look at this trend line and say we've broken out, and it might be the case, but keep in mind that it was a little bit arbitrary. Why? Because oppositely from this trend line, which seems to be more or less aligning with several points here in the chart, this one isn't. So might have been this, might be this. You understand what I mean? So yeah, short-term trend seems to be somewhat higher, and this seems to be corrective. So in the short term, I think it looks like it wants to go higher, and we might have even broken out. But longer term, there is absolutely no trend here. So bottom line, I would be looking for another market to trade. Okay. So thank you, guys. We can take even more time tomorrow to answer questions, because tomorrow we don't have a Spanish webinar afterwards, so there is not going to be a real limitation. Until then, enjoy the rest of the day and do well in the markets.
Thank you, Steve.
Bye-bye.
Thank you, everybody. Thanks, guys.